Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, a BC listener asks, today the Canadian Real Estate Association announced that the national average price increased 22.8% year over year in January. Joe in Collingwood asks, that's on Vancouver Island near Victoria. My real estate agent told me that house prices had risen on average $117,000 over the last year in January. Listening to Ross, I reviewed sold sites in Ontario to try to find homes that sold for $500,000 last January, and then what similar homes were for sale last week. Well, has the average price gone up 22.8% year to year?
Oh, it's crazy, isn't it, Jim? It just is nonstop. It has been, 92 months of reports from the Canadian Real Estate Association since that May of 2013 report. 92. They've created the biggest housing bubble in Canadian history, and they're out there inflating it even more as I'm speaking to you here doing this show. So let's start off with Collingwood. So we have a Collingwood in Ontario. So what I'm going to suggest is instead of calling these Collingwoods twinning up with cities in other parts of the world, how about you twin up between Collingwood in British Columbia and Collingwood in Ontario, and maybe see if there's a Collingwood in Alberta and Saskatchewan, Manitoba, maybe even Quebec, because that would be a beautiful thing to see. All these Collingwoods twinning up instead of going outside of our country to find somebody to team up with. I know my hometown of Burlington here, they've teamed up with Burlington, Vermont, and with a place over in Japan. Twinned, whatever you call it. So anyways, obviously, you can't go out and find on one of these sold sites and find houses that were selling for the price they were last year with a 22.8% increase this year. You're not going to find them. If this Joe is from Collingwood and not from British Columbia, I would tell this Joe what you need to do in Ontario, Joe, is you need to start your search a little higher. So last January, you've got to be searching around $630,000 because the Ontario Real Estate Association says prices have gone up $170,000 year over year in January. I'll tell you this, Joe, whether you're looking in British Columbia or you're looking in Ontario and you're looking at a house that was $500,000 last year, going up 22.8%, or in Ontario, a house that was $360,000 last year, going up to $800,000 this year. You aren't going to find it. Okay, you're not going to find it. In Ontario, there's been a couple 100,000 homes that have been traded over MLS systems in Canada. Some of the homes were on MLS systems in Canada were counted multiple times. Other homes that were sold in MLS systems in Canada never ever were counted. This is the world that I'm living in. 17 to 22% of the homes listed on the Toronto Real Estate Board that were sold never get reported as being sold in the province of Ontario. If someone says, Ross, you want to hear the new sales record next year? How are you going to do it for 2021? Oh, it's really quite simple. All I'm going to do is I'm going to count all the homes sold by members of the Toronto Real Estate Board that are located in Ontario, but the Toronto Real Estate Board doesn't report them as sold in their monthly housing report. Now, I've just caught the Canadian Real Estate Association with their pants down here, Jim, because there's nothing they can do about this. They have 92 reports that have been handed out to bank economists CMHC, housing analysts, people who pay for these reports. These are the paid versions, or the ones they've given to the press on, don't tell anybody. All these numbers are in there. They have last year's number for Ontario, Jim, where they have a Toronto Real Estate Board number, which they then deduct. Then they also have a York Real Estate Board, I think, and Simcoe or something, some other real estate board. And there's a footnote that says, make sure that you don't count those numbers twice as we've included them in the chart. Okay, so you remove those sales and then the numbers all add up. Okay, well, what happened to the other 20% of the listing inventory that the Toronto Real Estate Board has in Ontario that never gets reported in the Toronto Real Estate Board's reports each month for the Greater Toronto Area? Where did all those sales go? I mean, if they're selling at the same rate that they were selling in the Greater Toronto Area, or even half that, Ontario set a huge record last year that nobody's even talking about. Is Korea and Orea secretly going to count those this year? And that's how they came out with their new forecast? I don't know. Joe in Collingwood, did the average home in the province of Ontario increase $170,000 year over year in January? Think about it, Joe. Joe, sit back and think about this. We know that that's a CMHC insurable home. So that home can be purchased with 10% down. I'm not going to get into this 5% down or the shared equity discussion. That's something you should never get into a discussion about. Let's just stick with 10% down, okay? 10% down, you can purchase that home. Okay. So in other words, what they're saying is the average home buyer is going to take on a mortgage that is what does that add up to anyways? It's got to be a staggering number. What is the number come up at? $153,000 more. The average home buyer in Ontario is taking a $153,000 bigger mortgage. That's what they want you to believe, Joe. In other words, the average home buyer in Ontario is going to earn about an extra $20,000 more this January than the average home buyer earned last January, because that's the only way you can qualify for the mortgage. Joe, the reason why you can't go out there and find a $630,000 house in Ontario last year that sold, and then find similar homes that sold for $800,000 this year is because they don't exist. House price illusion becomes real, Joe. House price illusion becomes real because you believe it. The Canadian Real Estate Association says the average price is up 22.8% year over year in January. Well, guess what, folks? No time in history has the average house selling price of a Canadian home ever crossed over 15% on an annual basis. Never in history. And that only happened mid-year. That didn't even happen at the end of a year. You know, back in, what was it, when things were crazy in Vancouver in 2016, you know, we only ended up that year at 115% year-over-year gain at the end of December in Ontario. Okay? You didn't hit those big numbers at the national level because it didn't happen. I mean, there are stats, Joe, that have already been released to the public over the last 2 weeks that you haven't even heard being reported on anywhere in Canada. You have the stats themselves, which report a year-over-year decrease in average price, and you don't hear it reported in the news. Now, this would be okay if it was a small housing market, but when it's a huge housing market, don't you think this should have been breaking news in every single news outlet in Canada? Like, I mean, if there's a major city in Canada who had year-over-year negative house price growth, at the same time the Canadian Real Estate Association is saying nationally house prices are up 22%, don't you think something stinks, Joe? Something stinks, Joe. That's what I'm telling you. What happened in this January was the Canadian Real Estate Association set a record amount of house price illusion in a month. At no time in history was the sales mix so shifted, so skewed in 1 month that we reached this level of house price illusion in a singular month. Never in history. The annual pace of house price illusion, on top of that, has never reached this magnitude. Okay? Never happened. Why? We never had a lockdown before. There wasn't an opportunity for every provincial housing market in the country to report an increase in sales. Never. You've been manipulated. The country has been manipulated. But as we've said in the show before, Joe, housing bubbles can only go on so long till they have to pop. There simply is not enough money able to be continued to be pumped into the system at the increasing rate that the money has to be pumped into the system simply to keep house prices where they are, let alone inflating, so they bust. Panic sets in. The eventual fallout is unprecedented. Joe, listen to this. The median home across Canada that is CMHC insurable is priced at $375,000. Let me say that again, Joe. The median home currently for sale in Canada, which is insurable against mortgage default by CMHC or one of the other lenders, is $375,000. Well, you want to know something, Joe? Since we're the only people in Canada who have ever collected this data, we also know that last January, the median price of a CMHC insurable home was $375,000 on the market. It's no different. The only thing that has shifted is where the sales are concentrated. The wealth of the buyers that are buying. How long those buyers have been in the housing market. Obviously, if the average home buyer is an existing owner who's owned a home for at least 12 years, you're going to see a huge increase in the price that they're able to pay for their next house. Joe, the reason why you can't go out and find houses that were selling for $630,000 last January in Ontario, where you see them even listed for sale today at $800,000. They don't even have to be sold, Joe. Just listed for sale at $800,000. You can't find them. They don't exist. This is coming to a head, Joe. And what I'll do is I'll promise you this. House prices, the national average price did not increase 22.8% year over year in January. What I will tell you is if you go check the every place other than what was released as a press release today from the Canadian Real Estate Association, they don't even refer to it as the national average price anymore. Because starting in December, they started calling it the MLS house price, the MLS average price. They don't call it the national average price. The only place that appears is in today's press release. Every single marketing piece created for all of the regional MLS systems across Canada by the Canadian Real Estate Association has added the term MLS with a trademark insignia when they reference house sales, sale price, new listing count. It no longer states the average house price. It now states the MLS average price. That's because from the last 92 months consecutively in the inflation of greatest housing bubble in Canadian history, the Canadian Real Estate Association never ever reported house prices. They were just reporting how wealthy the home buyers were that were active in a given month.
We'll have more with Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Ross Kay. Ross, Carly in Kamloops, BC asks, we have heard Mr. Kay talk about being frugal and how that helped his parents, himself, and thousands of others get into home ownership. What tips does he have to do this in 2021?
Well, the tips, Carly, are the same today as they've always been. Now, what I will tell you is something. There is a huge difference between how you save for a down payment today when you buy a house today than when the thousands of people that I sold houses to before I quit, certainly since the ones that I sold between 2008 and 2014, the ones that I sold from 87 through till 2008 is a totally different, well, actually 2007 for me, because we quit selling houses again in 2007 when we knew the next correction was coming. And then when I bought my house in the late 80s, and when my parents bought their house in the 1960s, and when their parents bought their house before then in the 40s. Frugal simply means that you need to save more of your household income to be able to put towards your down payment. Okay? So when you're talking about buying a house, your singular focus needs to be initially on acquiring that down payment. This is nothing like the crazy articles you've heard about people needing to save 25 years for their to buy their first house. That's just asinine. The average first-time buyer takes the first step in the property ladder, and that is totally contingent on what your income is. How much mortgage can I qualify for? Okay, so if I qualify for a $400,000 mortgage, I need to have $40,000 down, and that'll allow me to buy a $440,000 house. I also need to have some closing costs. You also have to find out if anybody's going to help you with that. Often, I will almost say about 99% of the thousands of first-time buyers that we dealt with, almost all of them had help somewhere along the line. Sometimes it was to pay for the lawyer. Sometimes it was part of a down payment. Sometimes it was a full down payment. Sometimes it was a grandparent agreeing to pay for the home inspection. Many things. You got to remember your CMHC insurance, your mortgage default insurance for a high ratio mortgage is normally rolled into the mortgage, and that doesn't form part of the mortgage qualification either, which is one of the remaining loopholes left in the system from before the changes started to take place in 2016 to mortgage lending. What I will tell you though is this: what's changed radically is the efficiency of home ownership. Okay, home ownership efficiency is awesome today versus when I bought my first house, or even when my parents. I mean, my parents, when they bought their first house, they only had a 6% interest rate. When I had my first house, it was over 10. Luckily, all of my family missed the early 80s when my parents were helping people to stave off foreclosure. And obviously, during my real estate career, first-time home buyers were always facing a lower and lower interest rate every time I was going to get them qualified. You have to understand, after you sell a few hundred homes, you stop trusting mortgage brokers and banks to qualify your buyers. You start qualifying them yourself so that they understand fully what they're getting themselves into, because mortgage brokers and banks don't tell people what they're really getting themselves. But the efficiency of home ownership, it is staggering today. So we hear CMHC talk about affordability, which just makes us cringe when we even hear the word, because they don't have a clear definition of who they're talking about and what they're talking about. They throw out this vague 30% of income comment, which is bizarre to us for anybody in the housing space ever even to start to discuss. But they talk about affordability when we talk about efficiency. So, and it's a little bit like, home ownership is a little bit like your appliances. Every single appliance you buy today has an energy efficiency rating on the appliance. Every fridge that you buy tells you how many watt hours of energy it's going to consume and how much it's probably going to cost you over the year to own it. Homes are never expressed that way, but that's how we've always looked at it, because homes are far more efficient to own today on average than they were 10 years ago, 20 years ago, 30 years ago, 40 years ago. They're way, way more efficient. In other words, there's not as much waste. There's not as much of your income wasted owning a home today versus 10 years ago, 20 years ago, 30 years ago, 40 years ago. You don't waste your income. It's an efficient way to build wealth. It's the most efficient at this particular moment in time than at any time it has been in history. This is never discussed, but this is simply a fact of math. It's just the way it works. I would much rather own an exceptionally efficient home than I would one that's affordable, which is inefficient. Because a lot of affordable homes are so inefficient, have been so efficient over history. I got to qualify that. I got to take a historical perspective. That they actually can really delay your wealth accumulation. Where today it's just the opposite. They are a windfall. They are so efficient today that most home buyers will be able to weather a house price correction, the housing bubble bobbing. They're going to be able to weather it, and over their next 25 to 40 years of ownership, they're going to slough it off as if it was nothing. Totally different than 1990, when you couldn't slough things off by 2008, when you finally had returned your inflation-adjusted value of your house after owning it for 18 years, upgrading it every single year, and still only breaking even. That is not what you're looking at with today's efficiency rating on homes. There are some homes in Canada that you can buy today that are so efficient, they are 4 times more efficient than the most efficient home that you were able to buy in 1990 when the last housing bubble hit the nation. This changes though. So in British Columbia, you have a major problem. Your major problem is that the way that your housing market geographically is structured, it has to go up. It has to go up in the air. It can't expand. Let me put this in perspective. If you look at a map, so when we're analyzing housing markets, when we're looking at what is the potential for this market for house price change, okay? We're looking at the market totally differently than what you are or what other people are. So when we look at Vancouver, for sake of argument, we look at the distance between the outer perimeter of Mission and the outer perimeter of Abbotsford. Okay, there's a distance there. Then we go back and you would say, Port Coquitlam and Surrey, north to south, and then you'd also look at Burnaby to Richmond, north to south. And then when you look at that on it's almost 2 straight lines, 2 parallel lines. It's not an angle. When you look at Calgary, it's 360 degrees. With each mile or block that you were to expand the city of Calgary, it gets bigger with each circle you draw around it, because you're growing. You can grow technically in a 360 degree circle. Toronto, totally different market than Vancouver, because again, even though Toronto is on Lake Ontario, there's the hook at the end of the great Golden Horseshoe that opens up about 270 degrees of growth for that housing market. It doesn't have to grow up unless politicians demand that it goes up in the air. Where in Vancouver, it must grow up in the air. There's no place else for it to go. It has to go higher. It's just the geography limits the way that housing market is going to change. So that housing market, your efficiency is a totally different calculation than it would be in a Calgary or in a Toronto, because the structure of your house, geographical structure of your housing market, is going to force it to go higher into the sky. That's just the reality. This is too complicated for an average home buyer to have to go through. Real estate agents are clueless to what I'm talking about, because if they weren't, you would have heard this somewhere else. Because I think when I'm explaining it to you, oh yeah, that makes common sense. We basically, we're working in these 2 straight lines that run parallel, and they actually dead end just east of Chilliwack. That being said, you have to look for efficiency in a different way in that housing market. How do I explain to you? The median insurable home in British Columbia, the median mortgage default insurable home price, the median price of $375,000, okay, only buys you a 1-bedroom condo in Vancouver. That's what it buys you. In Calgary, it buys you a brand new, beautiful 1,600 square foot, 2-story, totally different house. Of course you can get more house there, because Calgary doesn't have to go up in the air. It can just keep growing bigger in circles. And with each circle, there's more and more housing stock that's able to be built. In Vancouver, there is not this exponential growth potential. You have to go up in the air. So as you go higher into the air, you get smaller square footage, and you get less home. These are the sort of things that you have to understand when you ask that question, Carly, especially for where you're located out in Kamloops. Okay? This is the perspective. It's totally different. Your home, don't worry about saving for your down payment, okay? Anybody can save $60,000 to get their first step in the housing market, and most people can save $40,000 within 2 years, meaning two incomes saving. You can move back home with your parents. You can have a little tiny rental for a couple of years as you build your down payment. Just look at the lockdown alone, okay? So we were talking earlier to Joe in Collywood about Ontario, how the Ontario price had increased. The average home buyer in Ontario supposedly was paying $170,000 more. Well, they only had to pay a $20,000 bigger down payment. Well, if you can't save $20,000 over 12 months of the last lockdown, in other words, your down payment wasn't $20,000 bigger, then you really shouldn't be buying a house. And that's the other reality that we're talking about. There's about 10% of Canadian families, households, who really should not be buying, or who have made the conscious mental decision that they want to rent for their lifetime. There's about 20% of Canadian households who rent because they have no other choice. Their income stream is not conducive to them entering the housing market. In other words, they refuse to move to a cheaper community. They want to continue to live in more expensive neighborhoods. And as a result of that, their income is not conducive to them owning a home. Then we have the 70% of Canadian families who want to buy a home, who will become homeowners, who will make the compromises necessary to get into home ownership. Because I'll tell your listeners this, I have never met a home buyer that did not have to compromise. That is some of the wealthiest people in Canada that I've dealt with. They had to make compromises. Even they did. The vast majority of people that I worked with, which is regular Canadians, they all made compromises. They all made sacrifices. What you need to do is you need to set your target, see what the minimum down payment requirement you're going to be at 10%, not 5, at 10, and you have to structure your life so you're able to save that money. If it's going to take you 1 year, it takes you 1 year. It takes you 2 years, it takes you 2 years. It takes you 3 years, it takes you 3 years. I would say most home buyers, first-time home buyers, should be able to save their down payment in 2 years. Now, you may not like what my answer is going to be, because my answer may be, you need to start working 60 hours a week. If your goal is to set your life up, well, before you have maybe before you have kids or before you set down roots, that's when you need to build your deposit, your down payment. Maybe you can do that by working extra hours. 60 hours a week at minimum wage, for two young people, builds a down payment in any province in this country. Doesn't mean you're going to get a single detached home in Vancouver, because those houses haven't existed for decades. It does mean you can take your first step in the property ladder and then follow the same pattern that families have followed for the last 50 to 60 years, and you can have a life that you can build upon.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, we get a lot of feedback on house prices and your housing market metrics. What do you see as one of the key indicators a regular family can use to understand where a housing market is headed?
Well, first of all, obviously nothing that organized real estate releases to you, nothing that real estate brokers release to you, nothing that CMHC publishes for you is of any use except for its housing completions. Housing completions are a valuable tool to anybody, because those housing completions dictate what happens with prices. It's part of our IP is that we understand how these markets interact with one another, the new homes market and the existing homes market, how they impact MLS data in each MLS system differently. But long story short, none of those things matter except, again, you can watch completions because you're going to see certain things happen in your local market based on what's happening with completions in your local market. But that's about it. What is a great feature of Realtor.ca? Okay, one of the great features that all of the MLS systems in Canada are posting their inventory on Listing.ca. Forget about the sales. Forget about the houses they tell you sold and how they want to create house price illusion each month. Forget about that. Because what those are, again, as we said a million times on this show, they're talking about the wealth of the buyer in a given month. But when you look at all the houses that are for sale in your area, then there's a lot to gain. You can look at what is the median home asking. What is the median asking price of a home in your neighborhood? You can look at what is the median asking price of a condo, a one-bedroom condo, a two-bedroom condo, of a single detached home, of an ultra-luxury class single detached home. You can look at all these things on any local real estate listing site. You can do it on Realtor.ca. In Vancouver, you can do it in RealtyLink. In Toronto, you can do it on the TREB website. Check what that median price is and track that median price over time because that tells you a lot about the housing market. The reason I'm not going to tell you a lot about that, why it tells you a lot about the housing market is because after you track this for a couple months, you're going to say, oh, now I know what Ross is talking about. And a lesson is better learned by doing it yourself than hearing somebody like me go on about this is what this metric tells you. No. You go ahead and figure it out yourself. You can also look at what the average asking price is, or we call it divestiture price, the average price of divestiture against the average acquisition price, what the average home buyer is spending. There are housing markets in this country today that are running at only 41%. The average home buyer is buying a home that is worth 41% of what the average seller is asking for their home. Totally different response than you get from organized real estate, which tells you the average listing price to the average sale price is 101%. In other words, people are paying more than what the houses are asking. Bull crap. Like, that's nonsense. It's why it was illegal to use that metric before self-regulation came into play with organized real estate across this country. If you ever use that metric, if you ever issued that metric in a report and it made its way to whoever was the governing council for real estate before it was self-regulated, you would lose your real estate license because it's a fraudulent number. Now, because real estate boards release them, they get away with it. I think it means something totally different to you. If you heard the average home buyer in your community was spending 50% of what the average homeowner was asking for their home on the market that month, then hear that the average home buyer was paying 103%, over 100% of the asking price. Well, it just means that those buyers were focused on those category of houses. And since those category of houses follow a cyclical pattern that is always at polar opposite to what the home buyers are doing, you always get these inflated numbers for sales to new listings price, or average listing price to average sale price. The average purchase price to the average asking price is a totally different number because it tells you exactly what's happening in the market. Oh, when I look at Realtor.ca, I know that the houses are 50% more expensive than what the average buyer is actually spending. So I'm getting this warped perspective as a home buyer when I'm looking at the housing market because I'm looking at houses that are 100% more expensive, 50% more expensive, to 100% more expensive than what the average home buyer is actually spending. In other words, if you're spending $500,000 on average, but the sellers are asking $1 million, that's 50% of the asking price. It's also 100% more than what the average buyer is paying. Totally different perspective. All of a sudden, things start to come into picture. You must ask yourself, why is this number never been published anywhere in North America by any real estate trade association, any MLS system, any real estate franchise, real estate brand franchising company like Remax, Century 21, Caldwell Banker, Royal LePage, all of these real estate franchise companies. They're not realtors. They are not real estate brokerages. They're real estate brand franchising companies. That's what they are. How come none of those publish that number? Why do they publish a number that leads you as a home buyer to believe you need to spend more than what the house is more than what the seller's actually asking for the property? Why aren't they telling you, hey, wait a second, those houses that you see at that price, they're 100% more expensive than what the average home buyer is spending anyway? Why do those numbers not exist? Guess what, folks? Here's the beautiful part, why we can talk about this today. Because if you didn't collect those numbers each month over the last 40 years, you can never get them. They're gone. They're deleted. You could start today, and it's going to take you 10 years to collect the data that you need, even to have a remote understanding of what that tells you about a housing market. But you as a home buyer can use it because it's a fact check. When someone's telling you you've got to spend over asking price on a property, now you know why. Because the average home is asking 100% more than what the average buyer is paying. The stock that's on the market, the average home that is on the market is 100% more expensive than what the average home that the home buyer is actually going to purchase. It's a totally different metric. Now, I will say when you have historical context, that is another powerful tool, but you can't get access to that. And since no one has ever published it in Canadian North American history, either can they. I mean, we certainly don't have it in the United States. We have it for Canada, though. We have it for a provincial market. We have it for large municipal market. We have that, but you have to collect it at the time because after the fact, it was deleted. You no longer have the ability to calculate, and anybody who tells you otherwise needs to go to jail because they're a liar. And you're welcome to forward us anybody's name who claims that they can produce it, and we will file a complaint immediately with the provincial trading association that they're susceptible to, because that information is no longer available. It's deleted. They would have to fabricate it now. So that's a key housing metric. There are literally dozens of housing metrics that determine a housing market, but most of them require such a high level of understanding of how a housing market works. In other words, the simplicity of a housing market is very complicated. Once you understand those complications, then the simplicity reveals itself. I will leave your listener with this. Let me just pull up a chart here before we end the show, and I'm going to go back. This goes back to our first call about Joe, when I told him about in Collingwood, where I said about the Ontario 630 last year. Try to find houses beside the one that sold for $330 that are selling for $800 this year. Go ahead, try to find it. Your housing bubble begins to deflate. Like there are key metrics that we measure that allow us to understand where the market is headed months before anyone else is even aware of it. Now, they could figure this out if they knew how a housing market worked, but if you don't know how it works, I'm just talking gobbledygook to you. I mean, it's, I'm speaking in a foreign language. So what that means is that the way that we measure housing market, okay, the housing market peaked in March of 2016. Now, on a national level, the housing market peaked in March of 2016. Okay, that was when the buyer mix at that particular month was at a level that was driving the housing market forward. Okay, that was the single record that we had ever recorded before. Now I gotta exclude back in 2004. So back in 2004, there was a period where the same phenomenon was going on. Other than that, what we saw in August and September of this year has never happened before. So the national housing market, as reported through MLS systems in Canada, had never reached the point that it reached in August and September this year. But I will also tell you this. The housing market has been cooling since September. The housing market has been cooling since September. In the same way that the housing market began cooling in April of 2016. In the same way, if we go back to 2007, the housing market began to cool in June of 2007, a year before anybody knew what was going on, before any negative house price growth was reported. You had a year's notice. This is the beautiful thing about housing markets. Your lead time is so far in the future that if there's any change that takes place over that 12-month period, it's going to allow you to adjust your decision-making process. You're never caught off guard. Housing markets give you this much notice. And I will tell you right now, that since September of 2020, contrary to everything that you've read in the newspaper, the housing market has been slowing. We don't care what anybody else says. Our numbers are irrefutable. Will it reach the point where it goes negative before the government alters the home trading infrastructure? That is the only question that we have, okay? We're measuring the market already now, way back in September, okay? From way back in September. It has been on trend and has not changed since that period of time. Negative. Will the government enact changes? I don't think there's any levers left to pull, folks. The only lever that they have left to pull is to change the mortgage qualification rate. That is the only lever that they have left to pull. With Evan Siddell in charge of CMHC, I don't think you're going to see that happen. With Jeremy Rudin in charge of OSFI, I don't think you're going to see that happen. So we are measuring this every single month. So now, technically speaking, we're 5 months in. Normally, you got a year's notice. You still got 7 months notice. So while everybody is going on about a 22% increase in house prices, remember, on this show, we're telling you the housing market has already been cooling since September of 2020.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.